Hey folks, welcome to Friday the 15th of October 2021. We are 9:41 a.m. GMT in Europe and yeah, what a day. What a day yesterday. I mean, we've seen some fantastic markets here on equities uh up about 1.5% yesterday across the board. Some really phenomenal reactions from some of the areas that we have looked at in these pre-US videos over the past week to 2 weeks. So really fantastic stuff going on. What you're seeing is Nasdaq now firmly on the bounce, SPOO's the same, Dow the same, WTI trading $82 this morning, testing Monday's highs already, and the dollar is going to sitting around the lows on the week anyway, and that euro looks to be capitalizing from that, and cable as well, having a pretty decent morning, up 0.26%. Looking over at the charts, really we just had a session about kind of knowing what to do and then doing what you know in the Nasdaq. And so again, coming back to what we were talking about here on the trend, I have the chart uh, cursor sync on here. I'll just take that off. So yeah, you can see yesterday, on the support of the 100 EMA, let's see, we had really quite a decent bid morning, which was definitely no secret at the time. Coming into the open, really around here, half two, little bit of a pullback, and then just making a run for it up on the 50 EMA. Yeah, confident with the 14,987s. I think for today, a pullback onto that 50 EMA, and create a bit of a baseline here, and then another push up, I think, is on the cards. However, failing this area, this whole little zone here, in around the 1500 psychological marker as well. Failing that, I think you're going to pull down 14,876s, and that is, I think that's the double top low. Actually, sorry, no, it's the double top low. No, sorry, the high in 7th of July, and a bit of a line in the sand area. I think we came into play here on the 11th of sorry, Monday actually. And so I think if we pull back, we could find the supports there for sure. And then obviously you got the 100 EMA well below, but I'm not definitely not against the 1500 taking a bid here, given the sort of knot of support that we have. So yeah, that's the Nasdaq. I mean, buying on the trend down here, looking at the risk reward currently for the swing traders amongst us. Um, you're looking at this sort of a trade at market. This is 25,890 bucks per single contract traded. Just let me make sure that, sorry, it's half of that. Just had to update this. So that's 13,010 bucks per single contract traded. It's well, yeah, 2,600 ticks, 2,600 ticks on the futures market on side. And the risk reward on that, actually, just let me get it back there. The risk reward on that is about 16, yeah, 16 and a half to 1. So really nice trade there to be on. Spoos, spoos. Where is it gone? Uh, yeah, on the spoos, it's all similar stuff. The spoos was a little bit extra special since we had this support come in on Wednesday, and really that condition just held. We had this push down on the open in the spoos, and then bid off up of both the 43.21 quarter, which was the low of the 22nd of September, and provided support on the Tuesday. So the Wednesday when she came in, just get on the bid there after the sort of opening volatility on the downside, and holding that trade now. So, I mean, let's see, on a risk reward perspective here, this is pretty much similar. Well, this is about 6 grand per contract. 493 ticks to target, 24 to 1, say 24 and a half to 1 at market right now. So, again, a lovely trade. And talking to some of the guys in the quant team, they're all about like high frequency, trading. And I'm like, well, guys, it's high frequency, low yield. If you're going to be that busy all the time, you are going to be making smaller profits. Whereas you could just kind of have lower frequency, higher yield trades where you're kind of just waiting for these type of plays, and you can get really big in those sort of trades. And we talked about that as well just before coming on for recording this session. We did a session for the pro traders about this. So yeah, look, markets are going up. Markets are going up, and I think we've now put in and proved the turn point on the bottom, and really the lows of Wednesday were just the beginning of what is now uplegging after the pullback. Yeah, uplegging after the pullback. So that's the sort of greater context of the market. And the Dow, yeah, I think there was some really nice areas to be trading in the Dow yesterday. From a value perspective, um, you know, ultimately yesterday the 100 EMA came in as support. Just let me zoom out a little bit in the 60s here. So you're having that open was above the 50 EMA, and a little bit of volatility spiking on the downside on the open, and then boom, up we go. 34,775s as it was written to be from yesterday's pre-US video. Now we've gone bid over. And interestingly, on the Dow, really quite aggressive on the reopen electronic trade. Obviously, it opened here, a little bit of a push, came down, closed the gap, and then you see that doji come in and easily getting on along here at that point to trade up in here, small little bit of a trade. I think we are gonna pull back 34,775s for another test before we do go higher. I would be pretty. I mean, these markets would be incredibly bullish if they just, keep going from this sort of little base that they've found for themselves up here. But we'll monitor that through the day. Oil, well, what can I say? I mean, again, it's just going up. Yesterday was one of those buy everything days. Here we are in the weekly bars. Guess what? And I did talk about this a while ago that really, well, actually, once we broke over 75 spot 74s, 75 spot 74s, that we would really not have much significant resistance until we got up to like the 89 77s and higher, 88 48s. So I don't see the resistance, the significant weekly bar resistance here. I just don't see it until we get to that 88 48s above. So that's my call. I'm sticking with it. And that's just it. So yeah, I think oil does need to work big ranges to pick up value. So I think we could easily come back and try an auction for probably say 80s. I think well, sorry, not 80s, sorry, 81s again. We could try and come down here, find some more support at the 80 spot 90s, but I don't see that on the cards right now. The market is up at some significant prices, and you got to think about, well, uh, producers are going to be running now increased hedging programs in the back calendars, so they're dry. We're now in a backwardation where the 5 and 6 year curve is now I think $20 down, something like that. We looked at yesterday. So while we push up in the front month here, we people are very well, we're far down in the back months, and so basically the further we scream up on the front month, the more people are going to start hedging in the back months and the 6 month out prices and the 12-month out prices. So there's a lot going on. So I think with that hedging activity going on the calendar months, I think you are going to see some pretty decent ranges put in oil. And just basically I'm sort of preempting that, just because you see like a pullback like yesterday doesn't actually mean that there's any change to the upswing at all. So yeah, and then gold. What are we seeing on gold here? I mean, it stalled out yesterday, really, given that equities are on the up. The bonds are tied in with this. The bonds weren't really going anywhere given this that was such a risk on scenario yesterday. So um, that's fine. I think gold can stall out here. I don't really know if anything interesting is going to come in terms of support. Maybe the 50 EMA and a pullback onto this uptrend. I'd actually like to see a return back to 1762s, rebid, and then up we go. So that's really the only thing I'm looking at on gold at the moment. All right, I think cable destination up here about 37.77s to give you an idea of that on the daily bars. You can kind of see here. This is the trend that really from the high, the 30th of July, confluence with actually this is derived from a weekly bar. So really this is the trend coming down. I think we're destined to retest that back up there, and showing you the activity on the 60 minutes, you'll start to see that we are jawboning into support on this area, compression up to resistance in this area, which will provide compression down. So I think we're just auctioning back up to test on this general downtrend. Okay, cool. That is it from me for today. Happy Friday. Have a great weekend. And listen, take care of yourself out there. And we'll see you on Monday. Cheers.